Really quickly, I'm Rashida Clark and I'm a realtor. Advice or files if you know anybody that is looking for a home and they're considering finding a zero down or basically a 100% mortgage. That's what this scope is going to be about. So I came up with this topic because I was talking to a good friend on Friday night, and she was telling me that she went and joined Navy Federal. She's a federal employee, so she went and joined the Navy Federal because she thought that they were one of the only banks around in her area that offered a no money down loan. And she thought that, you know, in order to get a zero down mortgage, you had to either use a specific bank product or belong to a particular bank. And so I am here to bust that myth and tell you that you can get a zero down loan from lots of places, mainly from FHA, which is a loan that a lot of people hear about. It's a loan that's geared to first-time home buyers, Federal Housing Authority. I always mix up authority and administration. But anyway, FHA, it's all over the country, you guys. They have what they call an FHA Plus loan, and that is a zero down loan, meaning you don't have to put a down payment to purchase the home. So that is available to anyone. There are income restrictions, but the income restrictions go by your location. So in my area, it may be a lot lower than, for example, in Washington, D.C. or Northern Virginia, where, good question, Kevin. They are going to be lower in my area than they are in an area where the incomes are a lot higher. Like my friend is in Northern Virginia, so the median income in Northern Virginia is a lot higher than it is here. So the income limits are going to change based on your location. Are the payments going to be higher? Yes, because you haven't put any money down. But if you're a new first-time home buyer or you're younger, a lot of young people, particularly if you're in your early 20s or mid 20s, you may not have a whole lot of money saved up. So it's definitely an option to get into your first home. Of course, the payments are going to be higher because you don't have any equity and you're getting a larger loan because you don't have any equity. Definitely. That was a really good question. But what I suggest to people is I have a couple of first-time home buyers that are using FHA Plus, and what I recommend is that you pay extra on your loan. And when you get tax returns, so it's tax return season, you guys, instead of going out spending it, going on a shopping spree, you know, buying a car, whatever you're gonna do, use some of that tax return to pay down your mortgage. That's the best way to do it. If you don't have any debt that's immediate that you need to pay down, use some of your tax return money to pay down your mortgage. And you should be getting a slightly bigger tax return because you have purchased a home. So that's going to be an awesome thing. You'd be surprised what folks do when they get their tax return, especially for people who get like those really big tax returns. Sure, Virginia, what's your question? I've been contemplating getting a car, but okay, that is a good question. Very, very good question. So when you're qualifying for a loan, okay, actually, let me go back. When people always ask me, well, I make $40,000, how much can I qualify for? So it's not that simple. The math isn't that simple. When they're qualifying you, and I say they as in the lender, the bank, they're looking at your income versus your debts. So if you make $40,000, they're not going to see it as risky, but it's counted as a debt. So you're going to basically have a higher debt ratio because you now have a new car payment. So somebody that makes $40,000 and only has, say, $300 worth of debt a month, revolving debt I'm talking, so like credit cards, you know, stuff like that. They're not counting your rent, utilities, because obviously that's going to change. But say they only have $300 in revolving debt versus somebody who makes $40,000 and then they have $700 of revolving debt that they're going to carry with them after they purchase that new home. Your qualifying is going to be different. So I always suggest to people, if you're looking between to purchase a house versus a car, get the house first if you can. If your car broke down and you need a car, then get a car. Yes. And yes, I still recommend get the house first, because when you go get a car, they don't care that you have a house note. You know what I'm saying? Like, qualifying for a car is a lot easier than qualifying for a home. So get the house first, as in go qualify, go get pre-approved, close on it, gotta close on it, and then go get your car. You can get the car the next month if you want to, but get the house first, because that car payment, and especially if you're not getting like a used car, your car payment is probably gonna be pretty high. If you get a new car, unless you're getting something that's kind of small and modest. But you know, if you're getting a $400, $500, $600 car payment, it actually could getting a car could even cause you to not be approved for a loan because your debt may be too high, depending on what else you're carrying. So good questions, you guys. Always try to get the house before the car. Definitely. and yeah, car payments kind of suck. They do. Like, I didn't have a car payment for a long time, and then I got one, and it sucks. It really does. But I mean, I don't have the $20,000 or $30,000 to put down cash, so it is what it is. But you guys, even if you're getting the 100% loan, they're still going to look at your debts versus your income. So you definitely want to consider that when you're looking at opening new credit cards, getting any kinds of new lines of credit, especially cars, because cars are the second biggest debt that you're going to have. So if you're thinking about getting a car, first, rethink that, because it could definitely set you back a little bit when it comes to qualifying for a house. And if it doesn't keep you from qualifying completely, it's going to reduce the amount of house that you can buy because you have too much debt in other areas. So you guys keep that in mind when you're looking at purchasing. So just to do a quick recap. Good. I'm glad that makes sense to you. Just to do a quick recap, you guys, you can get a 100% loan from any lender. I will actually go ahead and put the list or put a link to the FHA website. And they list all of the banks that are qualified to administer their loans. So you can get an FHA loan. It's called an FHA Plus. That is a 0% loan. And let me say something about that also. What they do when they give you a 0% loan, they give you a 96.5% first mortgage and a 3.5% second. So normally the FHA loan, if you get a regular one, the down payment is 3.5% of whatever your purchase price is. So they just basically give you all of that money, but in 2 loans. So your second loan is your smallest loan, and it's basically like your down payment. But it's still a 100% loan. You don't bring any money to the table other than, if you have to pay closing costs or anything like that. So you can get that loan from anybody any lender that's qualified. 30 years, same term. 30 years. I think FHA actually does do a 15-year, but it's so rare that I know people that get a 15-year, but they do offer 15-year. They also offer refinances. For people that have a FHA mortgage right now, they offer refinances, and they have a lot of different options available. So definitely go check the website out. You guys, if you've never been on the FHA website, go check it out. Like I said, it's federal, so it doesn't matter where you are. You still can use the FHA loan. And on top of that, a lot of states have special housing programs that you can kind of couple with the FHA programs that are offered. Okay? It's fixed. Kevin, I like your questions. It is a fixed rate. Now, FHA has an ARM option, or they have, I think, what they call a graduated, I think they call it like a graduated payment option. But right now, because rates are so low, most people aren't using that loan product. But they do have several options available. But the 100% loan, it is a 30-year fixed rate loan.